Conrad Saldanha is Managing Director and Portfolio Manager, Neuberger Berman. He's with us here in our studios. Conrad, great to have you with us here. Thanks very much for joining us. So, I mean, I guess some of the stuff is similar to when we've spoken earlier, which is the India-US deal is still happening, but not yet. And the AI thing, NASDAQ is down about 7% from the high. So let's just actually start with the US and your view on things. Do you believe it's just a technical shakeout at the end of the year? I mean, protecting profits, that kind of thing, or this is a turn in sentiment? Because, I mean, if it's a turn in sentiment and people are now fearful to own the AI stocks because of fundamental reasons, now that's a bigger problem. What's your sense?
A difficult one to call. We think long-term here now. Even coming to India, for me, there's so many AI bubble headlines, and people on the other side of it and trying to justify it. I think this is here to stay. This is real. Now, saying that, we've got NVIDIA's results, right? There's going to be well watched for in the next day or so. Tonight for us. I'm getting my time zones mixed up. But that's going to be one to watch in terms of growth. But I do think the ramp up in AI is still here to stay. You're seeing tons on the GPU side. We haven't seen fully the ramp up in ASICs. And enterprise spending hasn't really come through. So I think part of that, I think people might be a little bit ahead of themselves. I'm not saying that there aren't pockets of where there's euphoria and the fundamentals are quite not there, especially cash flow. But you look at the NVIDIAs of the world, there's plenty. Broadcom, they're cash-generating machines. Gross margins are super high. You're talking these businesses that are 70+%. Those are great businesses. And people question where they're deploying their capital potentially now. But I think they're building the whole ecosystem. I still think we're early innings in that. Valuations is something you've got to keep an eye on. And as fundamental investors, that's our challenge, right? And we have to pick those points. But otherwise, I don't see a broader bubble. There are pockets of that do happen. But I do think where there's, I know you're laughing at this, but I think there's profitless companies that are building out, right? And you're seeing with the computing power that's happening with every generation shift that we've seen from Hopper to Blackwell now to Rubin, you're seeing the cost of the cost per token come down so drastically. But there are people who make money off the tokens, too.
I was laughing, Conrad, because Prashant and I keep a tracker. Is it a bubble tracker, right? And the overwhelming consensus right now is that it's not a bubble. Okay. So,
Ignore those headlines, because those are SEO-optimized headlines, Conrad, which is, when bubble gets you hits. Yeah. But I don't think, Surbhi's absolutely right. I mean, look at all the mainstream sell-side research, right?
Yeah. Everyone's saying it's not a bubble.
Everyone's asked the question.
Is that the risk? Because everyone says it's not a bubble.
Yeah, I think there are definitely pockets of it, right? And valuations are not what they are. But you look out a year out with even NVIDIA, you're talking if it's a 30 PE stock, that's not egregious, right? Now, you can find loss-making businesses on the rental side as you go down the curve. How much, people question OpenAI, how much are they spending, right? But their tokens are just turning profitable, right? Now, would that spending slow down? It's been a big driver for US GDP growth too, keep in mind, right? Yeah. All this tariff, all this other stuff gets pushed aside because you've seen that growth come through in Q2, et cetera. So that's helped the economy as well in a reasonable way.
Conrad, so that's the global AI theme. Yes. So now I just want to ask you an India question. We don't have clear AI plays in India, but we have consumer tech, and we have these new companies that are disrupting.
I thought you were going to ask anti-AI.
No, anti-AI is for later. I'm asking something.
That's the new terminology.
We're the anti-AI.
Actually, it's not. It's. Go on. Sorry, we'll get to it.
But that later, whether we are the consensus anti-AI trade of the world or not, that later. But actually, my question was a little more serious about corporates. So we don't have these deep technology companies and these AI companies. What we have is consumer technology, right? We have platform companies, and we have, whether it's brokers, whether it's food delivery, and all of them based on the digital theme. And these stocks are getting top dollar valuations. Many of them are listing, and one example obviously is Grow. I don't know if you've seen it or not. But I mean, this is not a stock-specific buy or sell question. Does that, does that make you uncomfortable at any level? Is it that we lack AI, and therefore any company which has anything to do with digital otherwise is just getting bit through the roof here in India? Is that a worrisome sign?
But potentially, I mean, some of those, I would say what's happening on the hardware side, right, looks like it is going to be disruptive on the software side, right? And what OpenAI is doing, and you're seeing the valuation differential globally. that trend. Now, India has been a net loser in a sense. IT service companies, more time and material. If you can automate and the workload that took you 3 weeks to code takes you 3 days, there's obviously a risk factor, right, on your billing. Now, the Indian companies will have to disrupt themselves, right? And the old business model that they've had for the longest time has to change. Are some of the companies actually going to be big beneficiaries? I think so in India, where efficiencies, can be massively improved. I think there's a broader spend. It's super early days right now. When you look at the AI DC spend here, if NVIDIA is thinking and talking about 1 gigawatt in India, that's really scratching the surface, right? So I think it is a big runway for India for sure. There's going to be disruption. People worry about the social aspects of it on the job front, right? And IT was a big job creator. Is that lull and pause now? To be honest, if I look at the US, there's firings across the space in tech, except for hardware, and NVIDIA's hiring. But otherwise, so that's something we in the near term, it could be painful, but we all have to think and be disruptive, just like we've seen on the car side, which was a crowded business. One company in the US showed us how it can be disruptive, and that's followed through with the Chinese. Same thing's happening right now with AI, the same roadmap, and I think India needs to get onto that bandwagon versus worrying about it. So to answer your question on some of the companies getting bid up, yes. You've got a closed capital market here, and when those companies and some of the platform companies are showing growth, that's great. Can they get disrupted? Yes, but they've got the consumer. They've disrupted what was historically 1 million points of presence on retail sales. That's changed so quickly. Then India's been innovative with quick commerce, which hasn't picked up in a lot of places. Even now, China's following through. We're seeing that in other parts of the world. But that's been a great opener, I think, for India. And when growth is scarce, growth is coming down. You ask me, when you look at broadly in India Inc., EPS has slowed down so dramatically, so where you can find it, people are going to chase it.
Yeah.
All right. Hi, Conrad. Always good to have you in the studio. As you've mentioned in the past, you're more bottoms up, right? And you're looking for various opportunities. I recall a couple of them that you mentioned last time around. The power infra space. I think you like stocks like CG Power, Voltam. Those were the couple of names that you mentioned. And the domestic healthcare theme as well. Apollo Hospitals was something that you liked. They've done quite well. And JB Pharma as well in the new avatar is something that you liked. Tell us what's new. What's the recent addition, say, in the last few months that you'll have done to the portfolio?
Nigel, we haven't changed that much. We generally take a longer-term view to investing. When the companies I mentioned to you, I still think they look solid when we speak on that AI side of it. We've been big proponents that power is going to be the real bottleneck globally, especially in places like the US. I think India's got, I think Piyush Goyal last night and day before night in a conference mentioned about power capacity on the grid with good reliability. I think the Voltam still look good. I know the stocks have been softer. That's going to be a very long-term play. There's going to be cycles in it, but that's going to be the bottleneck. So still look good. I think the area where I think there's opportunities, Nigel, in terms of more recently, I would say, the banking side where we all got worried about loan growth.
Yeah.
Right? Then NIM compression as RBI cuts. And thirdly, what's the asset quality? The good news is for the bigger banks, that's looking good.
Yeah.
And the stocks are starting to react a little bit, but there's still a lot of upside. You're looking at some of these on single digit, just about double digit PE terms. And even on price to book, there's been a massive de-rating. I think that's an area which to me looks a sleeper with a longer term perspective.
You want to name a few of them? HDFC Bank, ICICI Bank, Kotak Mahindra, which one is it? Or the big boy, SBI from the PSU banking part?
I think they all look good. Honestly, I think HDFC with the merger issues now behind, I think that's looking undervalued. Axis is cheap. If you want to, it's trading a fair bit of a discount now. Kotak also is derated, but I think you've got so many picks. I'd say on the if I think of the PSU banks, SBI comes to mind as the bellwether. The numbers look good. The underlying assets and the list goals that they have are also executing really well. So that's also a good stock to own.
Talking about that anti-AI point that Surbhi and Prashant were mentioning as well, the US markets ended under pressure. If I look at the last 1 week or so in dollar terms, India has been actually an outperforming market. And as we speak, the Indian markets have moved into the green, which is good news. And tech is a sector that's actually standing out while NASDAQ has pulled back. Remember that correlation broke totally because NASDAQ did well and Indian tech, the index itself did fall apart. What do you like from the tech pack? You'll have mentioned you'll like various niche companies in the past. You want to name a few of them?
Yeah, I think we own the similar names. If you talk about and split it in two, in the hardware side,
yes.
NetWeb is a stock we like. It's an assembler, servers. When I look at India Inc., it's not what Taiwan does on the assembly side, but it's got a long runway. It's early days, albeit. I think that looks good. I would say on the software side, someone like an Orient Pro, we still own. On the IT services side, growth has slowed down, Nigel. When we look at it, we are talking about low single digit. I think you had mentioned, I think maybe Subi had mentioned Wipro before. You're talking a margin of just, flattish growth. Yeah. And that's where you need to, you need some operating leverage here. And I think that's where there's pressure. So we don't own much on the IT service space at all. And that's been for a while.
Since we're talking, actual themes that you like in the Indian market, I think you all also invested in the EMS space, the electronics manufacturing, right? Now, these companies are absolutely going all guns blazing, and we were speaking to Keynes yesterday. Their OSAT business is coming up, and these printed circuit boards, and everybody's in them. Amber announced an acquisition on the PCB side. What do you think of valuations now here?
Valuations.
And are you still owning some of this? Or have
we do own. I think when I look at that space, and Surbi, if I had to rank them, Dixon's has executed over the cycle. I can go back 20 years, right? They can keep on reinventing themselves. They can do scale, right? Now, valuations aside, but they're growing, right? And I think the opportunity is huge. Keynes is moving up the value chain. You mentioned about OSAT. And some of these will come with a fair bit of capital intensity, to be fair. And to get yields up, it's going to take a little bit of time, right? It's just a natural path. And then you've got, like you mentioned, Amber is trying to break in from its old AC supply business. So they've got a good shot. There's a few interesting names as you go down the list, but I would highlight those 2, 3 are still executing. And I do believe that if you take a 3 to 5 year view, they still look solid. You have to digest the valuations that have gotten re-rated.
Okay. So on a larger note, Conrad, as you look at this market and you compare it with anywhere else in the world that you want to be, because it's life is relative, right? India was a market which got its premium for growth, like you also mentioned. But now the growth is coming in short bursts in certain pockets. It comes and stocks go through the roof for 2-3 years, and that theme fizzles out, the narrative moves on, and the market moves on. I mean, is this the new normal of investing in India? And do you think foreign investors will be okay with that? Because the rest of the market at an index level, we're talking earnings of basically 10%. Will that be enough to get the foreigners back?
I think so. I mean, how did we get here? Growth started to decelerate, and keep in mind that nominal GDP has come down, right? That's a good predictor of your EPS growth. But valuations were high, and because of how much of money that is coming into the system, right, through SIPs, that's kept the valuations up. Thankfully, a few of the IPOs have come in and put a little bit lid on the market, given how much of capital that also sucked in, right, on the IPO front. I think India is going to be the contra trade in a sense. It's a domestic economy. Obviously, we've seen a fair bit on the tariff noise that has come through. I think it's proving more resilient, but I think you've got to see the growth come through. And I think that's where India... And we debate that in our own team. I think India, Nigel, you mentioned it earlier. If Nasdaq's down, India seems to be outperforming. I think that's the way I think it plays out as such. So it's going to be much more the domestic engine. Foreigners have sold a lot. The alternatives you mentioned in a relative sense, Korea was really cheap coming into this year, and they have some great businesses. Same thing for Taiwan. So as we look out, and those have gotten re-rated. Korea's up 70% this year. So when you look now, that gap has gone. Now it's about earnings coming back, and I think that relative premium that India traded at has narrowed. So I think there's that relative opportunity now into next year. I think the setup is looking good for India, where overvaluation, maybe overowned, and earnings decelerating, and I think we're starting to base
we are the reverse side of that trade here.
Well, Conrad, good to hear your thoughts. And I'll tell you what, the Indian bulls, market participants will say, the bulls partied all over the world, but who partied with Santa towards the end of the year? The Indian markets. Let's hope that comes
Fingers crossed, Nigel.
All right, and wishing you a good festive season. Hope to chat with you, rather soon. Thanks.
Thank you so much for coming.